All trading videos by OFA are for educational purposes only to illustrate sample use cases of the software functionality. OFA is not a trading system or strategy being marketed on a performance track record of live or hypothetical results. Trading involves substantial risk. Please do not purchase or subscribe to OFA services without carefully reading the complete required disclaimers and terms and conditions located on the OFA website. In today's lesson, we're going to look at a classic OFA trade, the decision point transition. Let's take a look at this low that comes in right here. Note the time. This is at 10 o'clock a.m. Central Time, right at the top of the hour. Throughout the day, you're going to find key transitions that come in directly at the top or bottom of the hour when new volume is entering the market. These are the types of transitions that you want to look for trade opportunities off of, because they're going to give you an opportunity to fade the market with a very small stop. A small stop means that you'll need a very small target to make a multiple on your risk. Remember, we're always looking for risk to reward opportunities that make sense. Let's take a look at the low here. We had an earlier low that then bounced 2 additional times. Normally, we would think that eventually a range would be broken and we'd see a large breakdown. But instead of a breakdown, we actually consolidate right at the top of the hour and then see the seller transition into buyers. Transition is a word you're going to hear us use quite often at OFA. This is a key transition in the market which provides us with an opportunity to trade off of a decision point, or a point at which we know the market should hold, and if it fails, we know that we should be moving with the market in the other direction. In order to isolate this, we're going to grab the decision point volume profile. So pull up the OFA volume profiles and grab the active decision point. Now we're going to make this active because we want to be able to trade off of it with the AlgoX interface. Now note how I picked this low. All I did was encompass the last 2 little periods here. Now why did I do that? Well, if we look at the volume clusters within, we can see that this is the last point at which there were sellers trying to drive down that were then countered by buyers who started lower and drove all the way back up through the last selling effort. That is the definition of a transition. Now, because there was other volume back here, I might want to go in and make some modifications to this and see if I can find a better fitting decision point. So I want to start by just dragging this profile over and encompassing all of the volume that was down at that turn. What we're looking for is a normal distribution of volume. For those of you not familiar with that term, a normal distribution is like a bell curve. We're looking for the majority of the volume to be centered in the middle of the profile with a bell curve going off of either side. Then we're looking for where the point of control is placed. The point of control is where we're going to be buying off of in this case. From there, we need to see where the edge of value falls, because that's what we're going to use as our stop. So in this case, we have the edge of value down here at 71.55, a couple of ticks below the point of control. Our stop with AlgoX is going to automatically be sent out to the edge of that. So it's very important that we look at these profiles and make sure that, for example, the profile is going to encompass these key volume clusters that we can see in the OFA bars. So by having our stop just below those, we know that we're adding just a little bit more of a layer of safety. Now, if I move this profile around and go back and forth from the 2 that I originally picked all the way out, notice that the point of control and the bottom of value are not changing. That's relatively unique. Most of the time, every time I make an adjustment to the profile, I'm going to get a completely different profile where maybe the point of control is all the way at the top or the edge of value is inside of some of these volume clusters. I want to always make an adjustment so that I'm giving myself the smallest stop and the best possible retention for that stop to not fall within where I can clearly see that there's volume. In this case, it really doesn't matter because it's not changing the profile no matter what I add or subtract. Once I've got my profile set, I want to use AlgoX to send the order where I want it to go. In this case, I'm looking to send an order to the point of control. And I'm going to offset that by 1 tick. So I'm going to put 1 over here in the little box, meaning I want to be a tick in front of it. And then I want to make sure that my execution algo is working off of the value area. So in this case, I have 2% of my account going at risk, and I'm going to be executing off of the bottom of the value area. Now all I need to do is click long and have my orders sent to the market. So my entry order is coming in here at 71.70. Now you can see the other orders that have gone out. This is a take profit order, and this is my stop order coming in right at the bottom of the value area. These orders are suspended. You can see down in your order ticket. They're suspended, meaning they can't get filled until my entry order gets filled. So we're ticking through this one right now. This is not an active order, and I don't have to worry about accidentally selling into the market. We've got all that covered in the math. So now we simply need to see if the market will trade down. And the beauty of a trade like this is that when we have everything lined up just right, we're looking at a situation where we have a 1, 2, 3, 4 tick stop. That means that to make 2 to 1, we only have to go up 8 ticks. We're now within just a tick of our entry, and the market's beginning to lift back up. After bouncing right in front of our order, the market is now coming back down into the 71.70 area. We're looking for it to pick up our trade and hold above the edge of value. And there's the fill. We've now hit the point of control at 71.66. Our suspended orders are now working orders. So our stop is live, as is our first take profit. And note that while the sellers are driving down, we have a blue cluster here, meaning that the action in the period is actually neutral. The reason for that is because we have sellers trading into a low, but unable to push any lower. So we effectively have sellers stuck at a low. And you can imagine that if buyers get on top of them and the market starts to rise, anybody short at this low is going to be unwinding, creating an order flow event where we can take profit. We've now hit our 2 to 1 take profit, and we can see our 3 to 1 take profit level has now gone out as a working order. Once the market begins to break away, in this case we've already taken out our 3 to 1, we can see that the market is lifting, and our stop is going to be static because our active profile is static over here. So one thing we can do to make that adjustment is to grab the profile and go ahead and bring it all the way over and make it live. When that happens, Tradeovate's going to ask us if we want to go ahead and update the order. Well, obviously, if we update the order right now, it's going to jump the stop up here just a little bit. We probably don't want to change the actual orders yet when we have that much profile on the screen. So I'm going to click no, and then I'm going to grab the other side of the profile and bring it all the way over to the low. That way, it'll recalculate just what I've got here in front of me. And in this case, do I want to update my orders now? Yes, I do, because I'm looking for my stop order to get moved up to the bottom of the current value area. So when I say yes, my stop order jumps up. You can see it's still 1 tick below the edge of value. And if I want to come in and make some changes to this profile so that I can see a little bit more information, I can do that now as well. So I'm going to double click on this decision point profile, and I'm going to add a few things like the VWAP, maybe even a CWAP line. We'll make that a little bit broader than it's set on here. And we're going to add a standard deviation line. I'll make that one dashed in pink. We're going to enable these. And I'm also going to put the profile on the right side of the margin. Now you can see that profile has been moved over here. We can also see that my stop order is right at the bottom, but I've got a little bit more information here. And if this does start to trend away, I'll have an opportunity to utilize some other elements of the profile in my trade management. As we lift up into higher levels, my stop gets moved to the volume weighted average price. Of course, I can set that at any variable that I want, and I can freely move it around on the chart by choosing any of the available fields and telling AlgoX to move my stop and override any management algos that I've put in. And we've traded through the 5-to-1 price level, so the position's been closed. So keep in mind a few key elements about the decision point trade. We're looking for a decision point off of a key high or low pivot on the chart. Generally, they're going to be found either at the high or low of the day or previous day, or major turns at the tops and bottoms of the hour in the early morning of the session. Our objective is to trade in front of the point of control, utilizing the value area as our stop. Now, many of you will probably be concerned about taking trades with limit orders at highs and lows, and you prefer to see the market actually move away from that pivot prior to putting on a position. The downside, of course, is that you're always going to end up with a larger potential stop when you do that. If you allow the market to move away from a turning point before getting into it, chances are it's going to cost you more on the risk. The advantage to doing it this way is that with trades with 3 or 4 tick stops, to get a multiple of your risk is going to be very easy, because obviously with a 4 tick stop, 8 ticks away is 2-to-1. 12 ticks away is 3-to-1. Right? It becomes very easy to get multiples when you have very, very small stops. However, you can take the approach, like we've shown in other lessons, of utilizing it as a double bottom play. And if you're going to use a double bottom position on this, what you want to do is, when we're approaching the low, utilize a range profile and start at the period that starts penetrating the low. So in this case, we're here. Now, if the market continued lower, you would be looking for the breakdown and trade off of the volume weighted average price. In this case, because the market lifts, by the time we get here, you're looking for a long off of the volume weighted average price, which gives us a 1, 2, 3, 4, 5 tick stop. So it's not significantly larger in this particular example, but it's something that you should be aware of. That generally speaking, if you wait for the market to move off of a major pivot, you're going to have a much larger stop, which means a more inverse risk to reward on the trade. I've been showing you this example with the Trade of 8 platform. If you haven't tried the Trade of 8 platform, I suggest you get a free trial. The link will be in the lesson, but you can get a free trial of Trade of 8 and OFA and AlgoX for 14 days. Great opportunity for you to go through these trades and try and replicate them and get a sense for how you're going to use volume information to trade better in the market.